Okay, so we've done the easy part. We've made the discovery. Now, how do you monetize that? How do you actually, where do you go from there? You've got your discovery. How did you, I'll start with Eira. How did you go about advancing this thing in such a way that shareholders made money, and you?
Yeah, I think at the point that you know you've got something of value, you almost have to switch from, purely approaching it as an evaluation exercise to one where you're actually protecting that value. And so you really start thinking about things like dilution. Of course, most junior companies, finance their efforts through public issuances. So the hope is that you can scope out a good program with well-defined milestones, and that at each milestone you achieve what you set out to do, and that results in the share price going up, and you do successive finances at higher and higher share prices. I think all of us that have been in this industry for long enough know that that is not always the case. So, markets change, and the classic example I think is, relevant to what I'm doing right now with Kaminak is Kaminak made a very good discovery back in 2010, and it's evolved into a 4 million ounce plus gold deposit. In a stronger market, this stock would have provided us with plenty of opportunity to fill up the treasury, to ensure that we could advance this asset with low dilution for shareholders. Unfortunately, the market we've been living in hasn't been like that, so we've really had to work hard to protect the value of that asset. And I guess that comes down then to pace, the pace of assessment. And that's certainly a lesson that I've learned over the last 10 years, is that you really have to manage, your strategy towards not just the end game, which is ultimately putting a mine into production, but how quickly you evaluate that deposit and get it into production, and, making sure that you don't dilute your shareholders into oblivion to get to that end game. I think that's really important, and it's a hard lesson for a lot of juniors that are used to just raising money as they need it.
I like your comment here, protecting that value. Once you make the discovery, it's about protecting that value and doing it with real solid engineering and metallurgical work and such, but protecting that value. Miles, you've got what's probably the best discovery in quite some time. How's it going?
We're going through the same exercise of trying to protect it. We have a fantastic deal with Freeport where they fund everything through to a feasibility study to go from their current 55% ownership to 75%. But they have the ability to turn around and make us co-fund whenever they want. So, we as a priority needed to make sure that we could not be caught off guard by that. So we raised just this year $33 million, mostly from strong shareholders. So we brought in some institutions, and we brought in a Chinese smelter, and we subsequently added a Chinese fund to the share register to make sure that we can't be wrong-footed by a partner. So that's been what we've done to protect the asset. We don't need to spend that money in the short term, but by having it, we have the ability to weather through any changes to the market and to the relationship in the short term, at least.
Tim, let me change this on you again. I know you're already written your notes. With Lydian, that almost early discovery, which was fantastic, you can't guard against what the government might do. What do you do? How do you guard against that, or how do you recover from that?
Well, you can try to guard against it, and we did. So you can try to guard against it by engaging multilateral institutions with the company on the share register, for argument's sake. And we did that with International Finance Corporation, which is the equity investment arm of the World Bank, and with the European Bank of Reconstruction and Development. You can try and guard against it by engaging government institutions such as the State Department on advocacy type on an advocacy type basis, on the basis that you will buy a lot of Caterpillar equipment. So there are ways of buffering that governments say, and we did all of that. But in the end, you're right. This is about protecting the asset, I suppose. But a government can, unfortunately, do whatever it wants to do at any point in time. And one of the biggest challenges I think we all face, this little session's about discovery. Discovery catches regulators off guard, especially in emerging economies, because even though they have a mining law, which was probably written by the World Bank anyways, they never really understand it. And they don't understand that the outcome, because it doesn't happen very often, that the outcome sometimes can be that a foreign company arrives in a particular country and discovers something that they didn't know that they had. And suddenly they don't think that mining law, which they might have signed 10 years ago, is such a good idea anymore, because there's, regardless of the fact that there's about 12 or 14 years on average before any project from discovery through to commercial production, and once you've paid off the banks, makes any sort of positive cash flow. Governments don't understand that, and they don't understand the momentum, and they don't understand public markets, and so they do tend to crash into the wall every now and then. They think they can mess around with the company, and they realise at the end of the day that it wasn't such a wise idea. I think if you go into, so to answer your question, I think if you go into an environment knowing that there's a good chance that you're going to, once you make a discovery, that the government are going to get upset about the fact that they don't believe they're getting enough out of that particular project, royalty, taxation-wise, or even in their personal pockets, which is more often the case. You are going to face that. Then you can ensure that there's a strategy in place to deal with it. It will happen, and then once that's happened, usually things get a little bit easier. But I think it's something you have to expect.
Excellent. According to the sheet, you all get 10 minutes to go somewhere, but no one's here for 10 minutes, so if you want to stick around, that'd be great. And I'm going to throw this open to any questions from the audience, if there are any. Yes, sir.
I'd like to ask, with regard to Timok, when you went in there, that was obviously a copper-producing area for a long time. Epithermal deposits, were you quite sure that you would find a porphyry if you went deep enough, or were you expecting that?
Do I need to repeat that, or you can
Yeah,
repeat that?
no, were we expecting to find a porphyry epithermal there? Porphyry epithermals are basically what sits underneath a volcano. Volcanoes occur in chains, so the odds of finding other ones were real, and that was our premise for doing the exploration. Did we know we were going to find one? No.
That's not what you told me. Any other questions?
Exploration is somewhere between, in terms of an activity, I love all the science stuff, but in terms of what we actually do, it's somewhere between detective work and treasure hunting. So you have all of these different tools you can use to mitigate your risk in terms of the science and in terms of your political relations, in terms of your community relations. There's hundreds of different moving parts that can improve your odds of success, can improve your odds of actually holding on to it after you've found it. But at the end of the day, it's a risk business. What you're doing is mitigating risk with these different things.
Anyone else? I don't see a hand. I've got one more on my list. What have you learned from your failures? I mean, talk about, we've all had at least one. What have you learned? What have you done wrong, or what have you learned? Tim?
Metallurgy is key. I'm not referring to Amulsar, because the metallurgy there is fantastic, but with another discovery I was involved with while I was with Anglo in Peru, one called La Rescatada. And there's lots of things you learn. I'm just picking one. And this is one thing, is that, I think, and I've seen this recently with other companies, I think investors should be calling for companies to do metallurgical testing a lot earlier than they do. You know, I see resource statements coming out with, and then subsequently followed up by terrible metallurgy, which I think is borderline criminal. You know, you need to know that some intersections will look fantastic, the resource will look fantastic. You have to know that you can recover that gold. If it's 50% recovery, then that's half the resource. Half the resource is gone, and presumably a lot more capex in terms of recovering that 50%. So I think it's really important, so we now do this systematically. The company that I'm now running, for argument's sake, we hit one particular project we were drilling in southeast Turkey. We hit sulfides. We got 10 metres of 6.4 grams in one drill hole. We sent all that core off immediately for metallurgy because it was sulfides. And that was our walk-away criteria. If we couldn't recover, then we'd walk away from that project and go and find another one. So I think that should be done really early. I think it's really important in terms of your decision-making process as an investor and as a company.
That's a good point. We talk about metallurgy a lot in the letter, and I think just knowing right off the bat if it's recoverable or what it's going to take to recover it changes everything. And the key thing here is if it's not, if you know the project's not going to work, there's bad metallurgy, an intelligent company walks from the project then, as opposed to continue drilling and wasting our money.
Yep.
You have any examples, Eira?
Two quick comments. I mean, I go back to the theme of stewardship of these assets once you make a discovery. I have been involved in projects that ultimately were technical successes and became mines, but they didn't make the shareholders any money. So I think that's key. The other thing I would just say quickly is that I started out talking about how science underpins what we do. But it's also important to remember that you don't know what you don't know, and you can't be too prescriptive when you're applying the science. You really have to have an open mind, and back to Tim's point, you know, looking out the window and making sure that you're open to new ideas and concepts. So often you'll be looking for one thing and find something else, and if you're too prescriptive and you've got the blinders on, you're very likely to miss that big discovery.
Miles?
Tough one. I mean, the longer I do this business, the humbler I get. I mean, I think exploration is about failing as often as possible, as cheaply as possible. You know, it's such a risky business. You need to organize your life and your business to turn over as many rocks as possible, accept your failures, move on, move to the next thing, and not get too hung up on it. So yeah, I mean, I fail often.
Persevere.
Yeah.
Perseverance, fail often, know when to quit, be in the right place. It's going to take time, do the science. These are just things I've written down.
Well, if you're successful, you were persistent. If you fail, you were stubborn.
That's a good
Take your pick.
Okay, good. We're about to the end. Miles, are you presenting at this show?
I presented already, but we've got a workshop at 3:40.
Today?
Yep.
Okay.
In the British room, I think.
Eira?
We'll be giving a more detailed walkthrough on reservoir minerals particularly.
Thanks, Miles. That competes with mine. I'm at 3:30. Kamenak at 3:30. I think, I'm not sure which room though. Boardroom.
There you go.
Boardroom. If
Tim?
you'd love
I
to
think
tell you.
we're tomorrow at 3:30. Donna? 3:30.
3:30 tomorrow. All right, and I'm doing another one of these at 5:20 with a different group. I hope this was useful. I think it was for me, actually. We got some really good stuff out of this, and thank you very much.
Thank you.
Thanks.